What's your sense? It's been as volatile a year as it can be. As for Rashi, so for you, what's your sense about how the quarter turns out?
Yeah, hi. So in terms of the quarter, I would say there are three or four key, you know, changes that have happened. The first is for the OMCs on the marketing side, things are looking better this quarter. So amongst the two fuels which haven't seen any price changes over the last, 8, 9 months, petrol has now turned positive in terms of margins, and diesel losses have also narrowed significantly. So on a QoQ basis, this should be a positive driver for the OMC's earnings performance. The second thing is on refining also, underlying product cracks have improved sequentially. So that should also be a positive for the OMCs. On the third point, I would say, as far as gas is concerned, there was the domestic APM price hike that happened in October. That usually that's an input for the city gas company. So all else being equal, that tends to hurt their margins. And we've noticed that companies like IGL, Gujarat Gas, etc., have not yet fully passed on the impact of this to consumers. So you could see a contraction in margins for CGDs in the quarter, especially for the likes of IGL and Gujarat Gas. So I would say these are the three broad trends that we have seen in the sector,
Are you
at least in 3Q.
okay? And are you constructive on OMCs, and could quarter three, because I heard you mention that there are some trigger points out there, that could this quarter
Mhm.
mark some sort of a resurrection of fortunes, if you will, for an HP or an IOC, so to say?
Yes, it's possible. So in OMCs, obviously, what matters is the macro backdrop. So if oil prices continue to remain soft, we have seen a softening. They have settled at closer to the $80 mark right now. If that sustains potentially with maybe some downside, then yes, that should definitely be a positive for the OMCs, especially for those who are more geared to the marketing side of the business, like HPCL. The second thing, yes, 3Q should see a marked improvement. But I think the other point that maybe investors could be focused on is what happens on the past losses, because in 1Q and 2Q, these companies made significant losses. There has been a bit of a clamor for them to be given some compensation by the government. Is that possible or not remains to be seen. Maybe one important event to watch out for will be the budget, if there is anything budgeted in terms of subsidy compensation for them. The third thing is obviously fuel prices itself. I mean, we have seen these frozen, but is it possible that once inflation starts, the inflationary base effect starts becoming more favorable, is there a possibility of us returning to, marking to market fuel prices? So these are two or three key things to watch out for. Given where valuations are right now, close to trough valuations, we believe risk reward is attractive on a selective basis for the OMCs.